Thank you for watching this video. I want to spend just a minute introducing you to the OTG Wave Tool. There are a number of different ways to use this tool. I'm going to show you the simplest way here in this quick video. But one of the things that we looked at in the previous video is this was the same chart with the support and resistance levels without the Wave Tool on it. And now we're going to look at this chart with the Wave Tool. Simply put, what this tool is doing is it's showing you the swings, the amount of volume in the swings, and whether or not the swings were bullish or bearish. So a red push down, like this swing here, indicates that this is a bearish push down. It's being measured that way because there was 4,000 contracts on this swing up, and then you had 40,000 contracts traded on this swing down. So there was some news that came out here on this particular bar. But the volume was extremely heavy to the downside, and that is what blew through this support zone here. But you had an idea that this might be on the way here happening. You can see a series of swings. Even these swings down are considered green or bullish because they are less volume and fewer ticks on the way down. So, for example, this move up was 23,000 contracts and 50 ticks, while this was 34 ticks and 15,000 contracts. So this was a bullish swing to the downside. Even though you did have this move down and it was 34 ticks to the downside, it was still considered a bullish move down because it was weaker than this push up. You have this tool here that shows you 4,000 contracts on the way up versus this 9,000 contracts on the way down. This was a bearish push up. Right, so even though this was a rally, it was a push up, and it was a weaker push back. Did not make a new high. 9,000 contracts versus 4,000 contracts traded, and then you had the big push to the downside. Here is where you could look to use this tool. You had a significant rally back here. This is 40,000 contracts. This was 60,000 contracts. This was 94 ticks. Even though this was only 70 ticks on the way up, that is a bearish number on the way up, but the amount of contracts that you pushed through was fairly significant versus what came to the downside. And here's how you can figure out a way to get in. You did have a pullback here. It was a small pullback. It was on 7,000 contracts, and it was only 14 ticks. So the way that you could look, just a very simple way, and we'll talk about entries and exits, but a very simple way to look to potentially get into something like this is you had on this 3-minute chart, you had a triple top right here. Okay, so we'll just put that right there. We'll turn this, we'll make this line some color that is easy to see here. Give me a second. There it was. We'll make this snow. We'll make it 2, and then we'll make it dotted. Okay. All right, so that is an area of entry. That's a breakout. You had a very bullish amount of contracts traded up. You are now trading above the support zone. You had a weak pullback, and then you looked to break out of this zone. Your stop could be, if your entry is there, your stop could be a very conservative area here, right? And then you'd be looking to target this move into this break point above you. That would be looking, that's where you would look to have your target. So let's take a look here at the ruler here. We'll get the, let me see here. Give me a second. Ruler. If you said this was your entry here and you were looking for this area to be your stop, then that is, well, let's see if we can change the text on this to a color that we can see. And we'll make that white, and we'll say okay. All right, so that was 15 ticks, right? That's a 15 tick stop to get underneath this area here, and then you would be looking to target to this level here, right? This would be the sweet spot or the target that you would be looking for. So again, we'll need to change that to a color that we can see. We'll make that white. We'll say okay. And that is 51 ticks. So right there is a very simple way to use this tool. Let's recap here what we talked about. You had a very aggressive bearish move to the downside. You had a bearish rally here off of this, or sorry, a bearish rally off of this pullback. So you had a small pullback 9,000 contracts, a weak pull up, 4,000 contracts, and then a big flush on 40,000 contracts. Almost immediately, you rallied back up over the top of this support zone. You had 60,000 contracts. You had a small pullback. This is a bullish pullback, 7,000 contracts, and then you waited for this breakout. Knowing that you had found support here, you would be looking to take out this target up above. You had a 15 tick stop and a 51 tick target, and that is a nice 3-to-1 risk reward ratio. And again, you had all of these swings. You bring your trail stop to this swing, it rallies up. You bring your trail stop underneath this area here, it rallies up. You can swing again. You bring your trail stop under here until you get all the way to the target. And this is a very simple way to use your support and resistance levels in conjunction with the OTG Wave Tool. And you could also just, well, we'll just leave it like that. This is a very nice way, though, to use your decision points. You had a decision point here. You could not sustain a move underneath it. You had a rally back up on weaker volume here, on a rally up on very aggressive volume. You had a pullback on weaker volume. You had a triple top. You would look to break out of this zone. And again, you had a nice target. So again, this is just a very simple way. There are going to be other ways that we're going to show you how to use this wave tool in conjunction with your support and resistance areas. But the key to this is very simple entry, very conservative stop, and a 3-to-1 risk reward ratio all the way to your target. So again, this is a way, entry and exit, to be able to use your support and resistance zones along with your volume tools to assist you in getting into an opportunity. So again, I want to say thank you for spending time watching the videos here, and we'll see you again soon.